All right. Good morning. Happy Thursday. A Thursday live stream this week. Sorry about yesterday, guys. I had a banking meeting that I could not reschedule. Unfortunately, being in the Eastern time zone now, the market is open mostly during business hours. So if you have to conduct any business, then you generally aren't going to be able to do it outside of business hours. So I had to um, do a banking meeting yesterday morning that I could not reschedule. So I do apologize. So Thursday live stream, getting some interesting action overnight. They sold into the close yesterday, kind of took it lower, spiked into the 676 zone, um, and then ripped it back higher. Made a overnight high that's green, and now are selling off of this pretty strongly. Um, we'll see how they open and where they open. If they open below the pre-market low, or what the overall tone of the market is. We'll get into some counts here in just a second. But overall, if you are new here, um, welcome to the stream, first of all. Second, we are the whole goal of the stream is to highlight our indicator, which is Invest with Jacob Pivot Point Pro. And it's been absolutely killing over the last month and a half. Last month, we were up 24,000. Now that's trading 50 contracts per trade. That is our full size amount, and that's based on about $150,000 account. And over the last 2 years, we are up about $60,000 on that account. So we started with 100K, we're up to 160K or so, and that is about a 60% gain over the last 20 months. So since last January until the start of this month. So I guess that's 22 months. So it's done really well, and it is, like I said, it's been absolutely crushing the market. Yesterday, it gave us a buy right at the lows that ripped straight higher, and then stopped us out. It gave us a sell here that we made a small profit on. We actually had about 3 sells in here that we made money on, and we had a loser in there as well, just because of how the indicator works. And then it confirmed trend day. So none of these got traded. These are all no trade events up here. So yesterday was the worst day of the week, because on Tuesday we had a buy signal at the absolute low that went from 675 all the way up to 680. So a 5-point move just ripped it straight higher. And then we actually closed that at the highs because of the sell signal. And then the sell dropped us down, from 3 points straight down. Then we got another buy winner into the end of trading there. So we only trade till 10 a.m. And these 3 trades were all just awesome, an incredible day. And then on Monday, another incredible day. We got the sell right off the rip at the open, 684. They took it straight down to 679. So another 5-point drop, basically straight down. Then you got a buy right off of it here at 681. That took us up toward the high, and then you got a sell off of that. Just absolutely crushing, guys. The indicator is doing really well. Again, you'll see a lot of buys and sells on the screen, but we only take certain ones. And what I mean by that is, you see this blue shaded area and this yellow shaded area. We don't trade any of that. That's pre and post market trading. None of that matters. We only trade the white area, which is regular trading hours. And then during that time, we only trade till 10 a.m. So right here is 10 a.m. So none of these buy signals that didn't work out, maybe this one worked out, but none of these were traded because it's after 10 a.m. The second half of the market tends to be really choppy, and so we don't trade after that. The moves are made in the first part of the day. They make a high, they make a low, and they trade off of it, and that's what we're looking for. And the indicator makes this super simple for you guys. So that's what we're doing today, is highlighting the indicator. UB, welcome to the stream. I just turned it up. If you can, Maxime, welcome to the stream. We're highlighting the indicator that has, as I said, made money day after day, month after month, for the last 22 months since we introduced it at the beginning of 2024. So absolutely killing it. That's what we're here to do. We'll go over that here some more. But first, let's get into some counts and what we're looking at in the markets. So we're looking at this as a potential diagonal setup where you have wave 3 up and wave 4 down. Now, here's the thing about diagonals. One, we hit the 1618 up here, which is a very valid high for this move. But this 4-5 is what I would say is okay, but it's not great. So we still would look for a 4 here, circle, and then 5 above into that 7,000 zone. I think 7,000 will get hit by the end of the year. Whether it's directly or not is to be determined. But diagonals are not very reliable. They're not very reliable structures. So once you break back, so what they're the reason they aren't reliable. So this high right here, this wave 1 high, it creates a wall of resistance, right? Because they came down off of it. When they come back to it, they chopped for a little bit here and then broke through. Once they break through, they want to come back and test this, and now it should be a wall of support if this is truly an important area to the market. Well, when it comes down and breaks through that wall of support, that's a warning that they want to go lower, that they may bounce it here and then give us a C wave down. Very, very possible. In fact, diagonals are very, very unreliable to play out to the upside. Now, recently, or to play out to either side, up or down. Now, recently, diagonals have been the hallmark of the market, and the biggest reason for that is that we're in late cycle bull market. And what that means is a lot of investors are looking for this market to top and turn. And so anytime you see a top, the turns are getting sold harder and harder because people are looking for them to break all the way down and give up the market. So you're getting deeper sells like we saw at the beginning of October that are still getting bought. So you're getting a sell. Sentiment looks like it's going to change, but the bulls fight back because the bulls don't want to give up the bull market, and the bears are trying to win the bear market. So they're selling really hard. The bulls are buying really hard. So you get a lot of overlap in that. And instead of traditional support holding, you break that support or resistance, and then you get what's overlapping diagonal structures. So at the end of bull markets, especially one that's been running for 100 years, at the end of bull markets, you tend to get a lot of overlap, which is why diagonals happen either at the end or the beginning of a move. And the reason for that is the beginning of the move. Okay, let's say we're flying to the downside and we're going to come back up. Well, the beginning of the move is generally going to be fought for. It's the end of the bear move. And the bears want to fight for this low and keep the market moving down. So when the market spikes, you get a 1, 2, 3, and then the bears want that to be an ABC, and they want to sell it back down. So they're going to fight to push this down, and they're going to get, through wave 1 territory. The bulls are going to hold lower support, which is wave 2's low, and push it back higher, and you get a diagonal. Because this is a strong bear move down, there's a big fight down here to reverse the trend of the market. When you have a strong bull move up, there's a big fight up here to reverse the trend of the market. So you get a spike down, you get a spike up. The bulls want to keep this alive, so you see a lot of weak bull moves that are choppy and don't give you full impulsive structures as an ending diagonal. So you have leading and ending diagonals because that's where the market is changing sentiment and starting to turn over, either up or down. And there's a battle there, and those battles are usually pretty hard fought. So you're seeing battles where wave 1s are getting penetrated by wave 4, and then you're still seeing completion to the upside because the bulls aren't giving up. And that's pretty common in ending markets and beginning markets. So we are in a diagonal if we're headed higher, which means it's going to be a choppy move higher. You're going to see something like this being an ABC here, and then a BC, something like that, up to 7,030. To the downside, it's very possible that this is an AB, and we'll see a bigger C down into the October lows area and the weekly 21 exponential moving average, which is called mean reversion, or basically average reversion, which means it comes back to its weekly average and then kind of moves higher again. Now, it doesn't have to move higher. It can bounce off the 21 and then go down, but generally you're going to want to see the 21 hold if you're a bull. If the weekly 21 fails, that's a big red flag, and if the weekly 50 fails, it can be good night Irene there. So that's what we're looking at on the ES. George, welcome to the stream. Thank you guys for being here. NASDAQ. Cold and flu season, guys. NASDAQ, same thing. Overlapping structure. This 4 got into 1 territory. Again, late night market cycles. If they push higher, we're looking for 26.5 to 26.7. If they push lower, they need to break this wave 4 low here at 25.2, and then they're going to attack this wave 2 low, and this is where the bulls must hold to keep this immediate bullish structure alive. This doesn't mean if they break this low that the bulls are dead and the game is over. It means that this immediate bull structure is dead. So from here to here would be dead, and we'd be looking for a new setup and potentially higher. let me be clear, the top of the market, quote unquote, could be in. I don't think it is. I think there's one more high at least coming to 7,000, and then we'll see what happens from there. There's a huge call wall at 7,000 that should reject the market pretty strongly. And when I say strongly, that doesn't mean, again, that the top is in. It means 1, 2, 3%. That's a strong rejection. And then we'll see what happens. The whole point of the market, guys, is to be patient. If you're trying to catch tops and bottoms, then you need my indicator, because doing it as a person is really, really hard, but the indicator does it quite well. And the reason is, in order for a top to form, in general, you need about, 50, 60, 70 things going on at the same time. Your mind can't find and process all of those things in real time. It just can't. Algorithms and computing power now, that's a whole different situation. And that's what you see. You see at the top, literally the top of the move. Now, this is pre-market. We don't trade this, but I'm just giving you an example. The things have formed, and you get the top of the move caught. And you get this way more often than you don't. The reason we don't trade pre-market is it's really choppy. It always chops around. Not always. Sometimes you have trend in the pre-market, but you see a lot of chop, and sometimes that's great, where you have decent volatility. But for the most part, you're going to see stuff like this, where you get a sell that fails and a buy that does okay. This sell towards the open did really well, but this buy failed. It's just not conducive to trading. The only trading window for day trading, in my opinion, is the open till 1 p.m. Eastern, 10 a.m. Pacific. And then you figure out your time zone from there. But basically the first 3.5 hours of the day. So that's what we're looking at overall. Now, the indicator, one of the reasons it's really powerful is if you go to its settings, it's looking at the futures market of the S&P, it's looking at the futures market of the NASDAQ, and it's looking at the SPY all at the same time, as well as about 170 other things. It's 175 total, I think, but 3 of those are these markets, and then so about 172 other things. Those things include high volume areas. Where is the market likely to buy or sell from? Because a high volume area up here is resistance. A high volume area up here is resistance. A high volume area down here is support. Now, I use just for visual reference, because I don't like the volume indicators. They kind of suck. But I love Mentor Q. And it gives you the high volume levels on your chart. That's the HVLs. It gives you the 0 DTE options levels that matters. It tells you the put support for today that matters. This is the 0 DTE support. And it tells you your 1-day minimum and your 1-day maximum. And your 1-day and it gives you your call stuff as well. Your 1-day min and max, those are like your shorelines, okay? So those are likely to contain the move. So if you envision the middle here as an ocean and the 1-day min and max as your shorelines, if the tide starts to move toward the 1-day max, more often than not, you can expect the move to slow down, stop, and reverse here. Now, it doesn't have to fully reverse. They can get up here and, do this. They can close slightly above it. But more often than not, it's going to close below. And if you don't know why, see, we got 9 minutes. We're good. The 1-day max is the high level of expected move for the day based on the options for the day. And the market makers want to defend this level very, 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 very much, because above this level, they're in bad shape and they're getting brutalized, and they really have to cover their positions. So what happens is, if the market is strong enough, say like it was 2 Fridays or 3 Fridays ago when we dropped 3%, it blew through the 1-day minimum to the downside, and the market makers were trapped. So they had to buy puts, which creates this waterfall and this surge of selling. And that happens at each of these levels to a degree. So a high volume level may get you a little quick waterfall down to the next high volume level. But once you break the 1-day minimum, that's where the dam kind of, or the levees break, if you will, if you want to refer to that kind of hurricane. And that's why we call these shorelines, because we build houses on the ocean based on the tides. We know where the tides are going to come almost every single day, because of, science and nature and just understanding them. So we're able to build houses in a safe place relative to where the tide's going to come up to, so that when the tide comes in, it's not coming into our living room. However, when a hurricane hits, okay, or a big time selling or buying day hits, a big time squeeze in either direction, those shorelines break, the tide surges, and water does come into your home. So there are times that those can be broken significantly. There are days, of course, that they can come up maybe spike 685 here and then come back below it for the close. They're going to want to close below this most of the time. But for the most part, this area is going to hold unless we're having a hurricane. And a hurricane is a day of substantial buying or substantial selling that they just can't control. There's not enough volume, buying power for them to stop it to the downside. So they got to get on board the put train, which causes the waterfall effect, and vice versa. This is how squeezes are created if you don't know. So what happens is there's a whole bunch of sellers sitting on the one-day max, and basically think of that as like you have a castle, you have a moat, you have a whole bunch of guys on horseback. They have all got bows and arrows and swords and shields, and behind them on the castle you have guys with arrows shooting down at you. All of that is sitting here. Now, if you break the siege into the castle gets taken and it's game over. You don't have enough firepower to stop the army coming through, and you have to get on board with that army or be killed. So that's what you can envision here at the one-day minimum and one-day maximum. If you want these Mentor Q levels, guys, I have a code. It's in the description. If you go down and just click the link in the description, it'll take you right over to their website. You get a 20% discount on it. Full disclosure, I get a kickback because I referred you, but it's a really cool program. You're getting a discount. I win, you win. I don't use what's that called? Affiliate marketing very much. I recommend TradingView because I use it and you need it for my indicator, and I recommend Mentor Q because I think it's the best tool out there. So I only recommend two things because one, it's just not my style. I don't want to recommend 80,000 things that I don't like or use. And two, I only recommend things that I personally use. I'm not going to tell you, hey, go use this trading indicator that I've never used in my life, because it's disingenuous and it's stupid. Now, let's be clear. We don't win every trade. In fact, we lose a fair amount of trades. That's just part of trading. You have to understand that you're going to lose games. The LA Dodgers probably, I don't know their record, but they probably lost 60 games this year and won the World Series. You know, they lost a third of their games or more. I don't know what their record was. But the Toronto Blue Jays probably lost at least a third of their games and made it to the highest level possible. So you're going to lose. It's part of competing. You're competing against the market when you trade. You have to understand that nobody goes undefeated except for the Indiana Hoosiers of 1970 whatever and the Miami Dolphins of whatever. I get it. There are teams that go undefeated. I'm being facetious. But my point is, you have to understand that in competition, especially long game competition like, say, baseball, you can't win every game. It's impossible. You just don't have the tools to beat the market every day, and it's going to humble you sometimes because it's going to do things it's not supposed to do. But if you play the statistics and you do those things, you're going to win more than you lose. If you look at what football is doing right now, and baseball and basketball, they're all using analytics. They're all using data. They're all using statistics to play the game. The game is to get the ball in the hoop. Just get the ball in the hoop. Just make money trading. How's the most efficient way to do that? And it's through statistical data. What is the most likely thing to happen statistically in the market when it does X? When it does X, we expect Y. Are there days that it can do X and we get Z? Absolutely. Those are going to be a losing day or a losing trade. But more often than not, it's going to give us Y, so that we know that that's a great place to place a trade and have a win more often than we have a loss. Now, let me caveat that and say winning percentage is misleading. You don't need a positive winning percentage to make money trading. And the reason for that is it depends on your risk-reward ratio. If I have a risk-reward ratio in my trades of 4-to-1, I only need to win 1 out of 4 trades to break even, because on that one trade, I won 4 units, and on those other 3 trades, or 1 out of 5 trades, and on those other 4 trades, I lost 1 unit, right? So 1 out of 5 trades, 20% winning percentage, and I broke even. So anything over 20% on a 4-to-1 risk reward, I make money. Now, your risk reward also has to be realistic. You could say, oh, my risk reward is 100-to-1. I'm looking for 100 units up and only 1 down. That's probably not going to come true very often. So, you know, yes, you only got to win 1 out of 101 to break even, but you may not even get that because it's unrealistic. So you have to have a realistic strategy and risk reward, and all of that gets taught when you get the indicator. So if we go over to, real quick, Invest with Jacob, and you go to membership plans. We got about 3 minutes here. Go to membership plans. If you want the indicator, guys, I'm giving you 30% off your first month right now. scroll down, you'll see it right here. TradingView indicators. You get a 30-day money-back guarantee. You get a discount on it. If you get the yearly, you're getting our Elliott Wave courses for free. So that's a $67 course and a $147 course for free if you get the yearly, and you get the 30-day money-back guarantee. So if you don't like it, you keep the courses and you get your money back. It teaches you all of the stuff that I go through. And then we have TradeWaves Academy. It's incredible. You get that half off if you get the yearly indicator. There's a lot of great deals going on right now. So stay tuned. There'll be some more later in the month if you don't want it today. But I highly encourage you get it. And then once you get it, if we go to TV indicator here, you will have to put in your TradingView information so I can get your TradingView account set up with the indicator. And if you come down, you can click here. If you don't have a TradingView account, you can click right here and get one for a discount. You get 20% off as well here. So that helps you out. Again, I get a kickback for referring you to TradingView, but that's that. And then if you scroll down here, you'll see that you can set up how to set up the indicator, we use our day trading strategy, our trend day strategy, our weekly swing strategy, and so on. You get all of those videos. Those will be updated soon with our new strategy on stop losses. We've changed that just a little bit, which has really paid off. So all of that is what we're looking at. All right, we got about 1 minute to go here, so let me get ready with what we're doing. Brad Venetter says the Dodgers were 93 and 69. There you go. They lost 69. So they won 2/3 of their games this year. They about 66% of their games, and they won the World Series. They were the best. That's what I'm trying to tell you is the best in the world, the Dodgers and the Blue Jays, I don't know what their record was. I'm sure it was similar, lost 2/3 of their games. That's a pretty big deal if you think about it. So trading is very similar to that. You're playing a long-term game. You're going to have losing days and losing trades, but those also are. Sorry, I got sidetracked with something. You're going to have winning and losing days, but we're going to have more winners than losers. All right, here we go. We're in a sell, so we're going to be looking for a buy here out of the gate. Looking at probably 677 as our likely buy target. We'll see how it goes here. Let me get that set up. I'm a little behind. Come on. I got to rambling. That's how I do. Okay, so we're 677 here. Opening slightly down. Might look for a gap fill before, if they're going to take it down, they might fill the gap first. Fairly slightly elevated options pricing today. That favors the bears. You do have red prices everywhere except for NVIDIA, slightly green. We like to look at supporting evidence. The RTY is red. The Dow Jones transports are slightly red. The banks are slightly red. So nothing is overwhelmingly red, but everything is currently red. I do want to look at the ADD and stuff. If they've started, the ADD is starting at positive 187, and the Volt is starting at positive 50 million. So a little bit of conflicting data. You're seeing some move down. The NASDAQ is breaking down right now a little bit. ES is opening right around its pre-market low here. So this is going to be an important zone to watch. Should be looking for a bounce. They bounced off of it here all the way back up to 679.56. So if they're going to bounce, this is a good area for them to bounce off of. 676 would also be a good area as well. KK, welcome to the chat. Only one team wins their last game. That is true. But a lot of teams had successful seasons. Seattle would tell you they had a very successful season. Toronto would tell you that. Milwaukee would tell you it was successful. Even though they didn't win the grand prize, they still had a great season. I would tell you teams like the Reds, who traditionally haven't made the playoffs, had a great season. NASDAQ's in a red bar. ES is in a green bar. So when you have that kind of non-confluence, that can lead to chop here. And that means you're not going to get a signal. So even if the ES was saying, or the SPY was saying buy right now, which it still isn't yet, but even if it was saying buy, we would not get a buy signal because the NASDAQ is selling. And if the NASDAQ is selling, which is usually the leader of the market right now because tech is leading the market, if the NASDAQ is selling and the ES is buying, they're not in confluence. It tells you that there's not wide market buying yet. And until we see that, we don't want to get on the up train because this can be just a dead cat for the SPY to relieve some pressure on some indicators and then turn back down. Right now, the market is backtesting the 8. This is your momentum gauge. So if you're new here, the 8 EMA and the 21 are what you look for momentum and trend, right? So we're in a downtrend right now. We made a high and we've sold. They're below the 21, which is your trend gauge, and they're below the 8, which is your momentum gauge. So the momentum is to the downside. The trend is to the downside. And until they break back above the 8, that would slow down momentum. That's the start. And then getting back above the 21 tells you that the trend might be changing to the upside. However, if they reject the 21 and come back down, all that is a back test of the trend and a reaffirmed trend down situation. NASDAQ still not improving. So if we go over to the NASDAQ real quick, you'll see that it is selling. You can see that its first bar of the day is straight down, and not just a little. It's testing its overnight low, which is fine. That's a good place for it to bounce from. ES was at its overnight low, so that's why you're not seeing ES crater as much here. And this is a high volume level for the NASDAQ as well. So we're seeing it bounce off of that a little bit here. We'll see if we get a buy signal if the NASDAQ can flip. Good morning, cats at home. Welcome to the stream. Sometimes I'd like you to be cats at work. What are you doing all day? Pre-market low and pre-market high, very important levels to watch. They are the start of trends. So if the pre-market low breaks and they backtest the trend, so what you're looking for a trend day is you're looking for a break of the pre-market low, a backtest of the 8 VWAP 21 area. Anywhere in through here is fine. And then a turn back down that breaks this low. That's what confirms a trend day. First, you have to break the pre-market low. Then you have to backtest one of these or these 3 levels here in some way, shape, or form. And then you have to come back down and break whatever low you made. Then you have a trend to the downside that should follow through, at least for a little bit. The one-day minimum's down here at 671, so you should see a trend down into that area, and then we'll see what happens there. Sam, Black Friday's coming. TradingView gets huge discounts. They do. Welcome to the stream. 8-second delay, says Maxime. It's quite small for YouTube live stream, but keep in mind if you're copying trade, having the indicator is a serious advantage. Yes, it is, because real-time trading is way better than delayed trading, because literally in 3 seconds you could have missed 20 cents of movement or more. I've seen 3 seconds go $1. So 8 seconds is a lot of time. I get the trades in as fast as I can. I tell you guys as fast as I can, but there's a delay in the YouTube stream, and then 2, there's a delay of me just having to type it in, say it, and get it out to you guys so that you can see it. So having the indicator so you can see it immediately is a huge advantage. Guys, if you're not on Instagram, go check me out there and follow. I gave out Bitcoin levels yesterday. I'll have a video today on stuff. A couple of days ago, I did one on the Hindenburg Omen, which is a big deal. The third one just fired. So now we have 3 Hindenburg Omens. And as they fire in clusters, that becomes more and more serious. But there's a couple caveats to that. People think that, oh, you got a crash indicator, the market's crashing. No, you got a crash indicator. That's one indication of the market. What it means is the market is setting up for, or the conditions are correct for a crash. So think of your weatherman, right? Storm starts to roll through and he says, "Oh, wow, tornado, watch." That means that the clouds, the wind, the atmosphere, everything is lining up to create tornadoes. That doesn't mean that there are tornadoes. That whole storm can blow through with no tornado ever appearing. If they upgrade to a tornado warning, well, now we've broken support, we'll say, in the stock market. And now you should be on alert and in your basement and making sure your house is still there. And then if the tornado runs down your street or crashes your stock, then you're in trouble. So I would call this a crash watch. And then I would say be patient and see if support breaks. We are at nosebleeds. If you got in early, you are likely extraordinarily high in profit, or you can take some profit. That's another good thing you can do, and leave runners. You can take half off and leave runners to lock in gains. And that was at the absolute highs that I gave that alert. So you could have got that, up there at the 6,900 level. So check out Instagram if you're not on there, and follow over there. I try to give out levels for different things over there than I do here. For instance, Bitcoin or the Hindenburg is not a normal thing I would cover here, or NVIDIA or stuff like that. Slow moving open here. The NASDAQ is trying to put in a green bar now. They've got a slightly green doji going on the 5-minute chart. ADD is improving somewhat. It's up to 271. Volt is improving. I would say you have mixed internals. The internals are mixed. Still have RTY solidly red. Banks slightly green. Transport's flat. So supporting evidence is telling you that there's been no decision made by the market yet. But the options prices are telling you that it's looking for some kind of not significant, but decent movement, maybe a 30-point day today, up or down, or a combination of the two where you get 10 up, 20 down, or 10 up, 10 up, 20 down, something like that. Just because it's a 30-point expected move doesn't mean it's going in the same direction. You can get 30 points up and 30 points down for a 60-point overall move, but only a 30-point move in the market. Pressing on the lows here, they have pushed through the pre-market low. So this is the start of a potential trend day. And if you have high-valued option prices with the start of a negative trend day, that is the recipe for a little bit of a storm. Again, you have containment down here at 671.10. That would be, and right below that is 670. So this zone right here is where I would expect them to kind of bottom out for the day and potentially rally, or bounce anyway, maybe not rally. This zone down here, 671 to 670, would be I would still buy that area if they get down there. So the significance of a trend day, sorry, I'm all over the place. The significance of a trend day is that we don't take the buy signals, because if it's trending down, why would we take buy signals, right? What I do, how I tackle trend days, is I will take the first buy signal, because you get what's called a failed breakdown a fair amount of the time, and you get failed breakouts a fair amount of the time. What that means is they break the pre-market low, they look like they're going to go down and test this and then this, and all they're really doing is trapping sellers, because everybody sees the pre-market low break and they don't understand how to trade it, and they just pile in short, and then they break the pre-market low and do this. If that's the case and we buy there, that's an amazing buy. And the risk reward is really good, because we have our normal risk, and the reward, should it work out, is almost always the pre-market high, which is 680 in this case. So you got 4 points higher versus 50 cents lower. So the risk reward on the first buy or sell is always really good. So we take it because we only got to be right like 1 out of 8 times um, to break even. And the only other time I will take it is off of these kind of levels where you have a 1-day min followed by the 0 DTE put support area. These are high volume options areas that the market makers want to defend. They want to defend this one too, 674 as well. They don't want to give up these levels, but if they do give up 674, they're very quickly going to come into 671, and then they'll defend there. So you can strategically buy on trend days, but you don't want to be buying every buy signal, and you really don't want to be buying much at all. Usually, I'm a sit on hands kind of person. I'll take the first buy and then wait. I won't even take this one. I'll only take this one down here because I'm selective and I don't need to take every trade. It's okay to miss a move. It's okay to not be in a trade. Cash is a position, and if you're always chasing the next move, think of that as a heroin addict. Heroin addicts get that first high, and that first high, I've never done heroin. Let me be clear. I'm describing what heroin addicts say. That first high is the most euphoric, amazing thing that anyone could ever imagine, according to heroin addicts. And every subsequent high after that never lives up to the first high. So they're always what they call chasing the dragon. And so if you're just buying everything on trying to get the bounce, you're going to burn up so much money that when you do get the win, it's not even going to feel like a high. It's going to feel like, oh, I got back to losing or breaking even. So it's really a bad strategy to try to buy against the trend without calculated risks. Good morning, Alejandro. Cat's at home lying on the couch, probably getting ready to Paul something in the face. Paul, what is VWAP and SPY and QQQ? Are you asking what the level is or what VWAP is? The level, the black line is VWAP on the chart, which is 677.20 on the SPY. I'll go over the Qs in a minute, but we could get a buy here, so I don't want to switch charts right now. Sosa, lobsters, welcome to the stream. I love lobster. If I'm having a fat day, a ribeye and lobster with lots of butter, that's the day. Fat both in calories and like I've won a bunch of trades or something. Because steak's like $704 a pound now. It's ridiculous. Hey, but inflation's going down. Don't worry about it. It's probably because cow farts are killing the environment and global warming. That's not meant to be political. Please don't start talking politics. Paul, I'm going to jump over real quick and see if I can give you the NQ VWAP. It is roughly 25,695. Now, there's still plenty of time. We've just started the day. What are we, 15 minutes in or something? Almost 20 minutes in. But if you want to see a down day today, traditionally you want to see the bears take it quick. So they've taken the pre-market low, but now you're starting to get a bounce. You're going to want to see the bears hold and accelerate to the downside. Otherwise, you're very likely to get bounced out of here and test the pre-market high. Okay, we're starting to get into some potential trade territory here, so let's focus on that. Just need the NQ to come along a little bit, and we'll be there. trading advice, if you get a buy signal or a sell signal and you're coming into a moving average like this one, very often it will reject that the first time, like it just did. It hit it and pulled back. So if you're patient, you can get a slightly better entry. Down here, it's almost 30 cents lower than it, or 20 cents lower. That's a big deal. That makes a big difference in profit. So if you're patient and you want to do that, that's not a terrible strategy, as you will see this reject the first time very, very often. Now, are there times that the buyers are strong and they're just going to blow through? Yes, there are. And those are times that, if you're trying to be patient, maybe you end up missing the move. That's up to you how you want to handle it. But in general, more often than not, you're going to get a little bit of a rejection. And I'm not talking like a whole bar of rejection. I'm talking a few seconds of rejection. They've been down there for 30 seconds, and now they're back to it. There's our buy signal. Okay, we're going to get in here. We got 162. And our stop is going to be 676.37. Now, when we get to 10% profit, which in this case will be 16 cents, which is 78. So if we get to $1.78, we will move our stop up 25 cents. If we get to 15% profit, which is going to be another 8 cents on $1.78, which is 86. $1.86, we will move our stop to break even. And then above that, we start taking profit and doing other things. We take our first profit at 20%, close half the trade, and then let it run. And if it runs, we get extra wins. So we allow our winners to run, and we cap our losers. That's the whole strategy in a nutshell. All right, that was quick. They stopped us out there. So we get stopped at 140. We will re-enter on another opportunity, but if they break this low, maybe not, because then we're going into a trend day. So we got stopped out on that one. Remember, they broke the pre-market low and they're back testing. This is the makings of a trend day to the downside. So we got to be careful here. If they break this low, that confirms our trend, and we don't want to trade the buy signals unless we get down to that 1 day minimum maximum. I will take one more shot at this though, since we are live trading and they haven't broken the pre-market low, or that low that they just made. They've broken the pre-market low, but they haven't broken this low. So we will take one more shot if they give us one more buy signal, as we did just reject VWAP pretty strongly. But if they come back to it, that's typically a bullish behavior. However, we just broke this low, so we just locked in our trend day down. So I would expect them to come down to at least 674, but if they break that, 671 is a very likely target. Might be a short live stream today if they continue to the downside. But this is the makings of a trend day. So they come down, again, break the pre-market low, back test, and then break this low. They just broke it, right? Now, to be clear, that doesn't mean that they are definitely trending lower. It means that about 8 out of 10 times they are trending lower. Maybe 7 to 8 out of 10 times they're trending lower today. Buys are going to get sold. That doesn't mean that they can't rip this higher still. They can. I'm telling you what statistically happens. And so we don't care. I mean, it sucks. You always want to be in if you can. We don't care if you miss a move that does this. It's just part of trading, guys. You're going to have to get over the fact that you're going to miss moves. Guys miss layups sometimes. Guys miss dunks sometimes. Guys drop wide open passes that they catch 9 out of 10 times, 9.9 out of 10 times. Things happen, and that's just part of the game. The game isn't perfect. So you have to understand that if we're wrong and it's not a trend day, well, we missed. Oh, so be it. But trying to catch that miss is going to cost you a lot of money. Should have traded yesterday. Yesterday was a good day. Why don't I live stream on Wednesdays? Just kidding. If you weren't here earlier, I had a banking meeting. I could not reschedule, and banks are only open during regular trading hours, so it is what it is. So here's your acceleration. This is what you want to see if you're a bear. in this case, we're looking for the next major level is this high volume. So you got some support here, 674.5 and 674. This is going to be your major support of what I would call upper support. So this is where the trend is going to really get confirmed, is if they start breaking through these levels, and then they're going to trend down, another 4 points to 671 or 3 points to 671 and potentially even 670. I would imagine they'll still close above 671 today. That wave 2 low is all the way down here. So they got some room still, 66.91. They're at 6,800 right now. So they got plenty of room down to the wave 2 low. That's not in jeopardy, most likely today. ADD has declined. It is now down to positive 60. Vold is positive but declining a little. NQ and ES both declining, and then if you look, you're getting a little bit more red over here. Not anything crazy. The RTY is your not quite your leader. The NASDAQ is your leader, but RTY is strongly red, confirming that down is likely the way. The transports and banks are red. SMH is red. NVIDIA is red, and so on. There's a lot of red to be seen here. Let's look at Meta, because I'm not taking trades right now. So let's look at Meta. We'll go through some stuff. This will be a shorter live stream, guys. Sorry, it's a trend day. We just don't trade against those. We're going to go to a different chart for Meta. So let's go back to the SPY on here. Meta's in trouble. So is Netflix. We need to go look at Netflix too. We'll go through and do some learning, splaining. We'll do some splaining. That's what they call it here in Kentucky, splaining. You got splaining to do. Meta is what we're looking at. So Meta, this is the 3 hour. Let's go to the daily on Meta. I hate the name Meta. It's so stupid. Meta is chopping on this major support, and so what we were looking at yesterday is you have a pretty clear A, B, C, and then a B wave. And then, so this is ABC for A, because remember, every wave breaks down into subwaves. So you have an ABC for a bigger A wave, then you have a B wave bounce. And then the gap in here, you get a 1-2 somewhere in the gap. That's just how Elliott wave works. If you have a gap, I could go look at post-market trading, but in general, they've hit the 1, 2, 3, 6. And in general, you would look for this to bounce back toward 680 to back test this breakdown where they broke down from. In general, in an impulsive wave, that's what you'd look for. And then this kind of move here. So far, they have not bounced too well off of the 1, 2, 3, 6. You also have really nice support right here that they're trying to hold. But if they break that support, the next gap fill comes in all the way down here at 592 at the one, basically a little bit lower than the 1618. They're also below their daily 200, and they've been below and been pushing away from it for 1, 2, 3, 4, 5, 6, almost a trading week. So 5 trading days is a week, but almost 7 full trading days. Down, they're not just below the 200, they're pushing away from it, and that is a really bad sign. If we go to their weekly chart, the longer you're under the 200, the weaker you are. That's a fact. On the 200 chart, they are now breaking down, on the weekly chart, they have closed below the weekly 50, and now they're pushing away from that. This is a really bad deal. So all of the major hedge fund managers look at the weekly 50 for support. Now, have they done this before? They have. They did it here. But when they broke below the weekly 50, the very next day, they spiked above it and closed near it, came back down, spiked back to it, and got back above it pretty quickly. So how they react here, right now, they closed below it and they accelerated. How they react here is extremely important for Meta, because if they close this week below the 50 for 2 consecutive weeks below the 50, that's going to put a little bit of fear into the hedge funds. And if the hedge funds have fear, then you might see a back test here of the 50 and then a meltdown into the 100 area. There is some support here. And that's also the 1764 area, which makes sense. You get a little bounce there. And then you could see continued acceleration down into this 474 zone, which is going to be major support. This is a huge level, and then the backbreaker is 442. They break 442 on Meta. That is a backbreaker, and I think the acceleration will really begin on Meta. So a lot of things kind of shaking down in the Mag 7 that aren't as pretty as people think they are. Netflix is, I haven't seen what they've done today, but they're in a similar situation. They're down 11. So Netflix, if you look at them, they're at the weekly 50. This is a critical time for Netflix. They're coming into key support at 1066, 1071, right in that area. They can spike through here and hit this support and zone, back testing this breakout over here, and come back higher and be okay. They can be healthy if that happens. But breaking below this 50 and breaking below especially this 1060 level is a bad deal. Then they're down at 943 next. This, and then down here at 860. And this is the backbreaker on Netflix, 860, 831. If they break this double weekly support, that's a bad deal. On the daily chart, though, they're in the same problem as Meta. They are below the 200 moving average. They have rejected, so they back tested it and rejected it and are still pushing down away from it. And that is a bad sign on Netflix. So again, they can recover. They got this support right here that they must hold. They're kind of consolidating here. If they can hold this support and accelerate back above these levels and get started to the upside, then they can turn healthy again. But for right now, this moment, Netflix is in a little bit of trouble. Bitcoin, we'll go over them as well. They are in a very, very big, this is the moment of truth. Actually, this is the moment of truth for Bitcoin, so we won't over dramatize this level, but this level is huge for the more direct bull. So if you're looking for the more direct bull back to highs, they have to hold here, and they've already tested it twice, and they're coming back down again. If they don't hold here, you can look for acceleration into 88, 89, and that is the moment of truth. If they break through that, it's very likely Bitcoin will drop towards 50 in a hurry. And they have a Wyckoff setup as well. This is one I went over on Instagram. Again, if you're not over there following me, please do so. You'll get a lot out of it, in my opinion. But they have this high, and then they made a nominal new high, and then they made a nominal new high. And you can see the pickup in volume here, on especially the selling side, telling you that the whales are dumping these highs. And that's why you're starting to see the dump overall. And so this is a pretty classic Wyckoff distribution pattern, and if that's the case, you're going to see acceleration here to the downside once they break support. Any other crazy ones? Banks are hanging in there. Remember, banks are going to be the key. If banks fail, it's game over for the market. They have been chopping around this 50 area. They do have a little bit of a A-B setup here, so we'll see how they react moving forward. But they do have a little bit of a A-B-1-2 kind of setup. If they break down, they need to break through 50 is the big level. So they got some support here at 50.82, but 50, there's a ton of support going across here. If they break through 50, they're very likely to come down to 47, and then 47 is kind of the backbreaker on banks. If they get through 47, it can be a lookout below moment. Now, when they get back here, I do suspect a bounce. They haven't been here since they got back above it, right? They came up here. They come back to this area that's heavy support. You should see a bounce the first time, and that bounce will dictate what happens in the market. If they bounce like this, hit this resistance and fail, then look out below for the whole stock market, not just the banks. All right, guys, they're continuing to press to the downside. As I said, trend day was confirmed. We're seeing acceleration. That's exactly what I expected to see. You saw the breakthrough of this 0 DTE, which will cause more acceleration. The next level down is the one-day min at 671 and change, about 671.10. And then you have 670 here as your final destination of they better hold. Otherwise, the levees break, the houses are ruined, and life is over for the bulls for the day. So not our best live stream in the sense that there really wasn't anything to trade. We had one shot at it. It didn't work out, so we gave them back some money today. It's kind of how it goes when you have a trend day. You're going to lose your first trade, and then hopefully you learn and don't touch the stove again. This market is hot. I warned at the beginning of the day that the options levels were elevated, which usually favors the bears. So hopefully you guys were on that as well. GDXJ moving vigorously, lots of positive earnings. Assuming that's some sort of gold. XLF, IWM, and IWT all down, which I use to gauge the market trend, is confirmed by you. That's a perfect way to do it, Paul. The RTY is a good barometer. So if the RTY was green today, I would say that moving down in the market's probably not likely. But the RTY is solidly red. In fact, not quite leading, but over the ES, and XLF and transports are now red too, and certainly not quote unquote solidly red, but enough red that you're going to see some movement. And really, the Mag 7 are the next barometer after that. If the Mag 7 had a lot of green in it today, you would see the market chop because everything else is red. You would see probably more chop in the market and slightly down. But since everything is red, down is the way to go. Except Google. Look at good try, Google. Gold is getting hit, and so is silver. It's kind of a sell everything day, it looks like. Except the VIX, of course. And EK Wax, we have that. But that's from yesterday. Oh, look at Starbucks having a cup of coffee there. So here's your acceleration to the downside. Again, 671 is the area we can look for next. If they're going to come down here, by the way, if you're a bull, you want them to get here fast. You don't want them to dick around. That's a technical term. You don't want them to mess around, come down like this, bounce, do this, and then kind of come down here like this. That's going to indicate that they want to go lower than the one-day min eventually. Maybe not today, but eventually. You want them to come into this screaming, because what the market wants to evoke emotion, especially for day traders where they're trying to trap people. So they want you to be scared and sell, and they want to get here fast and sell really fast, and you go, oh my God, the market is crashing, and then they go, nah, it's not crashing, bro. And then they crush you. I've been talking to my nephew a lot. Stupid stuff is rubbing off on me like, bruh. I don't know if you guys have talked to young people these days, but man, they say things that I don't even, I realize I was a young person once and did that same stuff, but low key, fire, and bruh are just, man, that's like the only 3 words they know. At any rate, you want this to come in here fast. If they start messing around in here and kind of sit on this for a minute, that's not a good sign for the bulls. The bulls want to react off of this quickly to trap. So the reason you get really fast reactions is because you can't trap if you're doing this. If you're down here doing this, everybody's like, oh, let's buy that area, and then you go up. Do they do that sometimes? Of course. But if that they don't do it a lot, because they'd much rather come down here, get you selling, and then do this where you don't even know it hit you. And then they take you the other direction. So little trading 101 right there. Oh yeah, 6-7. Yeah, that's the other thing. Yeah. I don't have to try it on him, Jack. He pounds me with it. It's stupid. Does the indicator work with ES minis? Also, since the future trade 23 hours, does the indicator work pre and post market regular hours? So the first part of your question, does it work on the ES? Yes, I have tons of traders that trade futures instead of the SPY. You got to remember, if it works on the SPY, it works on ES, and it works on anything, honestly. If it works on the SPY, it works on ES, because they basically trade exactly the same. So yes is the answer. The second part of your question, does it work after hours? I would argue no, and I don't trade after hours, but I can just look at the SPY trading after hours, and we did a lot of testing on after hours trading, and it's just not great because there's no volume, there's weak moves, you're just not getting what you need. Could you get a move like this after hours? Of course, but more often than not, you want to trade regular trading hours. And welcome to the stream, Twin Tunnels. Johnny Andrews, welcome to the stream. Prebz, welcome to the stream. Pete, welcome to the stream. Are you still on a weekly buy signal? Yeah, we are. No, not buy. Sorry, sell. We are on a weekly sell signal. We've been on a weekly sell signal for a minute. So that's another red flag, is that the market is moving up into weakness, on weakness, not into, on weakness. The indicator usually is really quick about reversing. So if you see a sell signal and they come back and buy the market, usually the next week or two, it'll give you a sell stop so you can get out. It has not issued a sell stop all the way up to 6,900, and that is honestly, that's the first time that's ever happened. And I keep looking at the data, and it's right. There's the underlying market, the breadth of the market is terrible. That's why the Hindenburg is firing. So the breadth of the market is terrible, and the market is moving up, and usually that's the sign of a not maybe a full-on crash, but a 5, 8, 10% pullback that that's coming. And we haven't hit the 21 weekly in a while, and that would be a pretty substantial pullback from the high. So I can understand why it hasn't done it. It's just the first time that it hasn't done it. More often than not, guys, I'm a salesman, so I obviously I want you guys to have my stuff, so I'm going to cherry pick one because Google is the best. But they're all good. Don't get me wrong. I can pull up anything, and you're gonna make money. I promise. No, take that back. Zip, scratch that. I'm not gonna promise anything. I don't know how you trade. You can pull up anything, and it's effective. But Google, man, I've never seen anything like what's happened in Google on the weekly. We use the weekly for swing, and let me change the settings real quick. Keep in mind, guys, we're in a trend day down, so I'm not looking to trade right now. So I'm just doing educational stuff because it's a live stream and you guys are here, so I might as well help you out. Nothing else going on. So if we kind of bring this in. So Google had some trouble, right? Everything goes through choppy environments. But then here in July, Google of 24, you got in at 177, and they dropped you all the way down to 146. So that was 30 points on one. That's about 18% drop. You got the buy, okay? They stopped you, and then you got a buy right here at 165, and they ripped you back up to 206. That's 40 on 16, so that's 30. That's 20. 25% move up there. You get a sell here at 184. They ripped it down to 140. So 1836. That's 40. So that's over 20% drop right there. And then you got this buy here, got stopped out, and then you got another buy at 166. They ripped it all the way up to 255. That's a 90-point rip up, guys. This is insane. So you got 20%, 20%, 20%, and then at 166 you got 90, which is 55% straight up. And these are just the gains on Google. Keep in mind, this is just Google's gain. If you're trading options, the gains are infinite. I mean, a 55% gain on this move from what is this, May to September. So that's month 5 to month 9. I say take them 3 to 6 months out. You're getting most of that move, if not all of that move, and you're getting it at exponential rates on options. I mean, it's an absolute killer. And even now, they gave you a sell right here at 236, so you get back long here at 253, and they ripped it up to 292. That's a 40-point move there, almost 20% already on Google again. So the weekly indicator, does it have points of suck? Yep. I can't express this enough. So let me show you. Let me go through. Give me 1 second here. This is trading in a nutshell right here, guys. Let me show you some results because I want you to understand how this works. So let me see. I got to get down to where we are. This is why you have to understand value. You have to understand, not value, that's the wrong statement. Sorry. You have to understand sizing. You have to understand risk, and you have to understand the strategy long term. It's a long-term game. So we were crushing all the way up until August. We had an incredible year going. And then hold on one second because I got to paste this in because you guys can't see it. And then in August, minus 214 on the contracts, which we traded 25 contracts, 53.50 negative. Profit year to date, though, still $31,000. So August sucked. The whole month sucked. You're gonna go through sucky times. It's just, and swing trades, same thing. You're gonna go through sucky times. Okay, so negative 53.50. Keep this in mind. All right, so that's August. September. Let me get to September 1 second. Where is it? Right there. So September, guys. Let me paste it in 1 second. Takes a second. Now, in September, we switched our strategy because we've been so successful. We went from 25 contracts to 50 contracts. September came in. Results for September, a whopping 4. 4 for $200. Merp, merp. Shitty month. So now we had a 53.50 loss, so now we're down 51.50 for those 2 months. 2 months of sucky trading. I get it. That's not fun. However, that is trading, guys. That is trading. Now, we just finished October. Let's go down and see how we did in October. $24,950 positive. I think we erased that 5,000, right? 56,000 for the year. Barely missed the bonus penny to make it an even 500. Now, this is an incredible month. We don't do this every month. As you just saw, the last 2 months before that, not so good. But that's the thing. You go on winning streaks, you go on losing streaks, and then you go on average streaks. So you're going to have a lot of months where you make $4,000 to $6,000. You're going to have a lot of months where you make, not a lot, you're going to have some months where you make $25,000. And you're going to have some months where you lose some money. But if you stay the course, these are the things that you do to make money. It's a long-term overall game. We were already up 30,000. We took a 5,000 hit. All right, that sucks. Nobody wants to take a hit, but I get it. And then we rebound that with 25,000 to the upside, almost doubling our profit for the year in 1 month. That's how trading works. It can be the highest of highs, and sometimes it feels like the lowest of lows. You got to keep yourself in the middle emotionally. October is a great month. I want to scream it from the rooftops, but I also want to tell everybody, hey, remember, August still happened. You still have losing months. You can't get discouraged when things aren't going your way. You have to size correctly. You have to use proper sizing for your account, and you have to use a proper risk-reward strategy, and that's what the indicator is. It is a perfect – nothing's perfect. I say things a lot. Just dumb it down into normal talk. It is a great tool to take emotion out of the market and to tell you blindly, enter here, exit here. Enter here, exit here. And if you do that over and over again, you will kill the market. There are so many people that are doing really well when they follow the rules. It's the people who give up because they had a bad day or week. I've had people get the indicator and the next day say, this doesn't work. Yeah, it didn't yesterday, that's for sure. But, I mean, there's a reason you get a whole 30 days to try it out, because most months we are very, very strong. So take it with a grain of salt or whatever you want. I just want you guys to understand that there is no perfect product out there. I don't care if you go buy Tom Lee's product or Jim Cramer's product or the guy on YouTube's product like me. They're all going to have losing trades. They're all going to pick stocks. If you buy stocks, they're going to pick stocks that suck sometimes. They're going to pick option trades that suck sometimes. They're going to pick things that suck. But the winners outweigh the losers so great. Motley Fool is great at highlighting this. I love Motley Fool. I used to advertise for them. But they put out all of these growth stocks. And they gave out 5, and one of them was Bank of the Internet. Bank of the Internet flopped. One of them was that airline thing? I forget what it was. Flopped. Another one was, so they gave out 5. That's 2. They gave out one that was about a 10% winner over 3 years, so pretty bad against the market. One that was a 5% winner over about 3 years, so pretty bad against the market. And then they gave out Shopify at $40. And 3 years later, Shopify was at $2,000. And that just destroyed everything else the market put out. So just because you have losers doesn't mean the strategy doesn't work. They went with 5 innovative companies that they thought would break the internet or would break technology or would break whatever industry they were in, and they were only right about one of them. The other 2 were okay, and then 2 flops. But that one that they were right about was the Apple, the Nvidia, the Microsoft, the Amazon. It was one of those. And they do that all the time. They gave you Nvidia at like $50. They gave you a bunch of them. They do great at stock picking. I love the Motley Fool. But people will get mad because they give out one that flops. Yeah, that's life. Welcome to trading, guys. Welcome to trading. If you're trying to take chances on companies, you're going to lose. You know, how bad did the people who had Bitcoin, like me, I felt great. I got in Bitcoin at 600. It went to 20,000, and then it immediately dropped to 12,000, bounced to 14, and I said, I'm good at 14, and I sold my Bitcoin. And now it's at 100,000. It was at 125,000. I bought it at 600. I'm so sad about that. But there's going to be times that you're going to see pullbacks. You're going to see drops. You're going to see crashes. Bitcoin came all the way back to 5,000. I felt like a genius. I was so smart. I got out at 14,000 and did not rebuy at 5,000. And then it went to 100,000. So trading is a game of long-term results, not today's gains or losses. Not any single trade should ever, 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 ever matter to you. If it does, you're trading too much money or you want too much return too fast and you're going to get blown up. Everybody who thinks they can beat the market overnight, with the exception of a few very, very lucky or crazy people that hit on the right thing, everybody gets crushed by the market if they try to exploit it. Sam, you said you're going to take that buy. Be careful. Remember, we're in a trend day down. But where did we get the buy off of is more important than we actually got the buy. And that's what I'm saying. So you had some of these losing trades back here in Google. Yeah, okay. But then you had 1, 2, 3, 4, 5 straight winners, or 5 winners, a couple small losers in there. And all of them were monsters. Those 5 winners will destroy everything you got over here. And you will be so green in Google, it won't even matter. So that was the long story of that whole deal. Let me go back to the SPY real quick. We'll see where it's at, and then we'll kind of wrap this up because we're not going to be trading. And we went through a lot of educational stuff. Hopefully you guys found that educational and learned something, or at least motivated you to get back into trade. Maybe if you're struggling with trading or something, it motivated you to get back into trading properly. Let's get into the 5-minute. I mostly want to see where they bounced off of. They're kind of in a no man's land. We don't have the buy because I'm on Google right now. Let me switch it over. There you go. Yeah, it's out of no man's land here. You're not really off of a major level, but you're close enough to that one-day min. By the way, this is not good for bulls in general. It doesn't have to be a bad sign, but in general, that means they want to go lower than this overall. That doesn't mean today. It doesn't mean today they're going to do this. They can come back up here and then maybe tomorrow do this, but in general, you wanted to see them fly into this one-day min. But yeah, this looks like it's working out okay. So far, maybe you're getting close to taking a profit. Again, I think that you're chasing, though, and I would warn against that because you're going to get caught up in a lot of losing trades doing that. Good for you this time, but one more educational thing. I just, I don't know if it's an older book. When I say older, like 10 years. There's a book, Atomic Habits, and I just finished it. And it's incredible. The science behind habit forming, both good and bad, is really neat. But one of the things that one of the things in it is that your brain conditions its responses to things and quickly adapts um, how you view things based on dopamine and different levels. And everybody kind of knows this stuff. But the thing I found that was interesting is your brain will latch on to instant gratification and write that faster than habit forming in the good way. So most bad habits are instant gratification and long-term pain. So you smoke a cigarette, it feels great right then if you're a smoker. It gives you the high you're looking for, the relaxation, whatever it is. And then 5 years, 10 years, 20 years down the road, you have lung cancer, right? Or you have high blood pressure. So you get instant gratification in a bad habit, and in the long term, you're getting crushed. In the short term, in a good habit, you may make a trade and lose, and there's no gratification in that, or you only win $1, and that gives you $400, and that doesn't seem like a lot. But 5 years down the road, you have $100,000 or $1 million, or whatever you have. So good habits always take time to see the results, and bad habits instantly gratify you. So you write bad habits into your brain 10 times faster than you do good habits. What this does, if you succeed here, is writes a bad habit into your brain, because you're going to say, I should always buy when it says buy, because that's a good idea. It's not. I can't say it enough. I'm glad you won. Good for you. I don't want you to ever lose money. I'm not here to cheer against you. I'm here to tell you that this will ingrain bad habits in you, and it will cost you in the long run, because the next time you're going to see a buy, you're going to say, oh, that worked out. Let me do it again. I liked winning $1,000. And then you lose $2,000 because you get attached to it. So while you're feeling good now because it worked out, all you're really doing is writing a bad habit into your system. And I'm not trying to preach at you. I'm trying to help you. Hopefully you see it that way. But I am glad it worked out. Like I said, I'm here to help traders make money. But I think in the long run, that will not make you money. There was something else I wanted to. I swear they put coffee in my tea. Something else I had in my brain there. Always practice good habits, I guess. But that's a great book. If you haven't read it, you should check it out. Atomic Habits, especially if you want to try to change things in your life. And, if you're trying to quit smoking, lose weight, be better at trading, go to bed better, anything you want to do better in your life, it's a tremendous book. I really liked it. Does anybody have any questions? I'll give, let's see, a 7:25. I'll give you guys a few minutes. What book? It's called Atomic Habits. I think James Cleary is the author. Must be Beverly's son. Does anybody have questions? I'm here. I'll give you any educational questions you want right now. Please note, I can't give you trading advice. That's not what I'm here for. I will tell you what I am trading, and I'm happy if you copy it. That's up to you. But all I am doing is telling you my trade. So don't ask me if you should take a trade anywhere. I'm not going to give you that. But if you have questions on how the market works or about anything in the market, if I know the answer, I'll give it to you. If I don't know, I'm going to tell you I don't know, because it's not fair to you for me to just ramble about something that I don't know about. I'll give you guys till 7:30. That's 7:30 Pacific, 10:30 Eastern, to type in any questions. Can you explain Hindenburg? Slightly. The best way. So Hindenburg is, it's not my indicator, but let me Google this in another window. It is when the market is advancing, like moving higher, especially at all-time highs, but market breadth is declining. So your advanced decline line is going down, and your market is going up. So you have divergence there. On top of that, it's a certain amount of divergence. So it can't just be like 0.01 negative. I think it's like a 1% divergence or something between the advanced decline and the all-time highs or the highs. And when it fires, it's telling you that we're making all-time highs, but the underlying market isn't participating. In other words, the Mag 7, we are concentrated. The Mag 7 is driving the market. Now, it doesn't it doesn't clarify that. That's not something that's part of it, but that's what's happening. So you have 10. You actually have 10 stocks that are 42% of the S&P gains. That is insane. 42% out of 10 stocks, and they're all tech stocks. So it might as well be the NASDAQ. That means that 58% of the market is responsible. 490 stocks are responsible for the other 58%. That is not a good thing. Now, what the Hindenburg is telling you is that those other 490 stocks are doing is declining. If you look at stocks under their 50-day moving average, it's like over half of the S&P. So it's partly how many stocks are under their 50-day moving average, what the advanced decline line is doing, and what the price is doing. So price is going up. You have a certain percentage of stocks under their 50-day, and you have an advanced decline line that's going down. There's some other factors in it as well. I haven't dug that deep into it, but that's what I know about it. Oh, you guys loaded up here. Hold on. I got to scroll back up. Where do you put stops and take profit usually? Okay, so it depends on what the trade is. If we're day trading, I day trade the SPY. I don't because I'm trading in a group and watching everything. Trying to day trade more than one stock is really hard. So you can pick a stock for the day, and I would day trade that. That's up to you. But I do the SPY because one, it's super liquid. I can always get in and out fast. I never have to worry about if there's enough demand in there that I can sell back out. Two, it moves pretty fast. It's got usually a pretty good range for a day. And three, I've traded it my whole life, so I feel like I know the SPY very well and how it reacts and moves. I feel like if you've been in my room, I hope you feel that. So if I'm trading the SPY, if I get in right now at 674.53, let's say I have a long here. My stop is going to be 674.50. I'm sorry, 674 even. 50 cents lower than where I got in on the SPY price. Okay? So if my option is whatever strike it is, that doesn't matter to me. I'm setting my stop 50 cents lower on the SPY price. Roughly 5 ES points. 1 ES point is roughly 10 cents on the SPY. Or $1 on the SPY, sorry. Oh my God, 10 cents on the SPY. 1 ES point is roughly 10 cents on the SPY. That's what I'm trying to say. So I would set it 50 cents lower. If it hits that stop, I am out of the trade. It doesn't matter if it hits it by a penny and goes back up. It doesn't matter. If it hits that stop, I am out of the trade. Take profit to the upside. So what I'm doing now, I've just updated this. When we hit 10% profit, I move my stop up 25 cents. So if it was if my stop was 674 even, it now, once I'm at 10% gain on my option contract, it moves up to 674.25. This limits my losses and continues to allow my gain to run. Because more often than not, when it spikes up and then turns down and goes negative 25 cents, it's going to follow through. And you're going to, if you have that whole 50-cent stop, you're going to eat way more loss than you need to. Once we get up to 15% profit, so for example, if I have a $1 option contract, when it hits $1.10, I move my stop up 25 cents in SPY price. When it hits 15%, so that's $1.15, I move my stop up to break even on my option price. So my stop now translates over to $1. So if it's at $1.15, my stop is $1. At $1.20, 20%, I take half of my profit, half of my position off. So if I have 10 contracts, I take 5 off at 20% gain, and my stop becomes $1. So I can never go down. I can never do less than 10% on that stock or on that option contract. As price moves up, that's when you have to be able to, if you're not in my room, find some key levels, because right here, so you probably got profit right around here if you took this one. And if they kept going, okay, the 21's in this case probably a little bit too close to take profit. So let's zoom out a little bit here. The 21's probably a little bit close to take profit. If they came up to the 21, That's 675.62, and you took profit down here at 675.10. So you're probably doing okay. But I'd look for them to spike into this next high volume level at 676, and I would take my next level of profit there, or maybe even up here at the pre-market low if they're going to back test that, right? From there, I'm looking at the next key level, which is 677. That's a consolidation here as well as a high volume level. That's a nice place to take profit. And then I'm looking at the next area, which is going to be the pre-market high area and this HVL area. So you're looking for the next logical places to remove profit where the market's likely to reject. In this case, it rejected VWAP, right? And it's turning back down. This is why trend days are not good buying opportunities. So while you might have snuck a winner in there, you did it under the guise of they're going to sell. Anyway, so that's how you take the profits. I hope that made sense. What kind of education should I get for SPX 0 DTE trading? So honestly, TradeWaves Academy, I think I'll pull it up real quick and we can go through it. You don't have to get the whole thing. You can buy individual models. That's not what I want. Invest with Jacob. We go here. So if you don't want to get the whole thing, obviously, I'm not telling you this because I want to sell my product. Of course I do. I'm telling you this because if you want the entire view of how price action and 0 DTE trading works, I think having the whole thing works better. So here it is right here. There are a couple things right now. If you get the yearly indicator, you can get this at half price. But if not, it's regular price for now. But here are the modules. So market psychology is a big deal. You have to understand the psychology of the stock market, why they do what they do, how they do it, how they're trapping you, and why. That will help you a lot. Capital management, understanding how much each trade, especially when you're doing 0 DTE, is very, very important. But if you want to know strictly 0 DTE stocks, I would say the options trading for sure. While it says basics, it's pretty in-depth. We go through the Greeks and all the reasons the options accelerate and why they work the way they do. Candlestick patterns, price action, all very important stuff. I would say price action is more important than candlestick patterns. And then any of these you want to add on are all of them are important, but those are the two, options and price action, that I would say are the most important. And then maybe the bear traps and reversals, something like that. But at that point, you're getting into $240, and you might as well just get all of them. Again, I get it. I'm trying to sell a product, but I'm trying to be honest with you as well. That is what I would say personally. It's all consolidated. You don't have to go look for it all the internet and watch 10 different videos and search for them, and it makes it very simple. But that would be my recommendation. For sizing, what percent of total capital should you use? 1 to 5%. So I'm using, we switched on our day trading to 50 contracts. A contract in general is going to be between $1 and $2 per contract. So if you're trading 50, it's about 5,000 to 10,000. And if it's roughly 5,000 or so, we got up to 150,000. So 750 is still going to be okay there. Sorry, that's did I do that wrong? 5% of 7,500. So for the most part, we can trade 50 contracts pretty comfortably. It gets a little higher if we got elevated contracts where they're over $2. Then I usually size back down to a half. But for the most part, you should be using 1 to 5%. We traded half size positions for a whole year to prove the concept of the indicator. Actually, a year and a half. We just switched a couple months ago to full size. We proved it over 18 months that it is successful if you follow the plan, and we've switched to full size and done really well. So, but 1 to 5%. And here's the thing: if you're doing stops right, you're risking 5% at max. But if you get stopped out, you're going to lose like 1% or 10% of that 5%, if that makes sense. So like 0.05% or 0.5% of the actual total. So even though you're putting $5,000 down on your options contracts, you may stop out at say 4,300, So you only really lost $700, even though you had 5,000 totally at risk. I hope that makes sense. Have I done an Elliott Wave Outlook video recently? If you're talking big picture, nothing's really changed, so you can watch the same big picture. I do them in my room when people ask for them, but I do the drilled in Elliott Wave stuff all the time, and I did it at the beginning of this video where we talked about where we're at as far as the count off of the lows. We're in a wave 4 down and then 5 up here, and then now the question is, has that wave 5 topped, or are they going to be able to play? Jeez, Peasel. My ability to grab thin lines on here is crazy. We're talking about, is this going to be a wave 4 down with a 5 up, or is this a potential top or a bigger wave 3? We're still kind of in this decision mode until major support breaks. The market hasn't been able to break major support since April, and that is now the defining factor of where we need to see the market come down to. Thanks for setting up this live sessions. You're welcome, Sonny. Welcome to the stream. Welcome to the stream, Andy, T, Nicholas, if I didn't say. Thanks for setting up this live session. Do you feel that SPY and QQQ is setting up a rising wedge? I do. That's the same thing as a diagonal, yes. What difference in 401k trades between holding gold or the gold miners, GDX, or other miners is lower, allowing to buy more shares? GLD or gold miners, GDX, other than miners is low. I see what you're saying. You want to buy you're wanting to buy miners instead of GLD because it's cheaper, I think is what you're saying. I don't know. I'll be very honest. I don't look at the miner stocks. That fund I'm in, EK Wax, does have miners in it. It's very balanced. So if you're new here, so we're at 118 as of yesterday. Today it'll probably go down because gold's down a little bit and silver's down a little bit. But this EK Wax fund is a precious metals fund. And we got into it April of 24 when it was at $48. And it's been up as high as 125 where we took some profit. And now it is back, it's at 118, but it's well over 100 and almost 50% of where we got in at. So our 401ks are absolutely smashing. That's stuff you get in my main room if you want to be part of my room. We manage our 401ks, and we've outperformed the market extraordinarily. But as far as, what miners to buy and if they're cheaper and if it's better, I can't tell you that. I don't want to give you fake information. So I just follow GLD because it's going to be what drives things for the most part. It's kind of like the SPY of gold. Has GC completed wave 4 correction? Possibly. I would like to see it come a little bit lower, but it is possible that it has completed that correction. Again, guys, we don't take these buys because they're very unlikely to give us. So the reward is very likely to be this, a 1 unit win or a 10% win or whatever you got out at. And the risk is likely to be this on the backside. So you may not even get to this, and you're just going to see all these buys fail. So that's why we try to stay out of those. This is an FYI. This is continuing its downtrend. It backtested VWAP, got right back below momentum, and accelerated again. Now they're coming into a key area here. So if you wanted to entertain a buy out of this area down here, I believe it's going to be the low from yesterday, most likely, or the other day. Didn't we just make a low? I know we didn't. Oh, the overnight low. Did they already break that? Man, I'm not paying attention. Let me look at this. Yes. What low are we coming? Oh, this low here. That's what it is. This is from the 4th, 2 days ago. Why am I not seeing? Oh, is it? At any rate, they're coming into this low here. I don't know why I'm not seeing it on the other chart. This is where the 1 day minimum is. This is why it's here. So my friend David Frost passed away, but one of his favorite lines was first time, best time, meaning they made this support. So they came down and they bounced. That means this is a key area, no matter what. Even if it's a bounce like this, not a huge bounce. So when they come back to this area, it's very likely you're going to see a little bit of a bounce. Maybe not a big one, but a little bit of one. That's why your 1 day minimum is right here today, because the buyers or the market makers know that this is where people want to buy. And if they break this, then it's acceleration probably down to 66.50, and we'll see what happens from there. On trend days, is it okay that I bought a put at VWAP? Well, I don't like how you spelled VWAP. uh, yes. So VWAP is VWAP, volume weighted average price. Yes, it is okay. So an aggressive style. In fact, in my trend day strategy, one of the I don't use it, but one of our traders has swears by it, so I just put it in there. There are two ways you can trade trend days if you want to trade them. One is a back test of any of these that starts to fail, you can do it. Or if you see a buy stop, so you got the buy signal, he shorts anytime he sees the long stop, and says that's the key that it's failing lower again and looking lower. Now, if you shorted here, I'd start taking profit. You're down here at the 1 day min, so I'd take at least some off here. They can come on down to 660, 670. But I suspect they will close above this level most of the time. And you can see they're already trying to bounce a little bit here. So I would be trimming if I took this level up here at 675. You're down 4 points from there, or 3 points. That should be a really nice win so far. So hopefully you've taken some profit. Are they all recordings? Is there any Q&A available? So, sorry, T, I'm just getting back to you. So, yes, they are all live. So I taught that class live. There are questions and answers in the class that the people asked during the class. They all paid a lot more money for it because it was live and they were able to do Q&A. However, if you buy it and you want to email me a question here and there, I'm happy to answer them. I'm here to support you guys and help you trade. So if you want to get it and shoot me questions, then I will help you out with that. That would be a big Santa Claus rally, yeah. Jeffrey Booty. I hope I'm saying that right. It could be Boot. If it's Booty, that's an awesome last name. Great information. Thanks. You're very welcome. Welcome to the stream. Andy Bennett. The indicator looks like a great trading tool, but your own knowledge bring in an extra dimension, i.e. understanding today was going to be a downtrend early on. So I appreciate that, but I teach that. So if we go back to my site and go to TV indicator, when you get the indicator, make sure you watch all the videos. I don't put them on there for no reason, guys. I put them on there so you can succeed. They're not long. It'll take you less than an hour to watch them all. And make sure you watch Trend Day Strategy. If I pull it up right now, I show you how you identify this trend and how you trade it. You can see here the sell stop came in here, and it's a really nice move up. And, that's one way of trading a trend day like I just went through. But all of that is in this Trend Day Strategy stuff. I got it right. It is Booty. Awesome. Booty, 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 booty everywhere. You've never heard that, I'm sure. I'm such a nerd. I will always say the dumb name things that I know everybody's heard 1,000 times. I can't help it. It's like I'm an idiot. It's like I'm on that Progressive commercial. I don't want to become my parents, but I just can't help it. All right. Well, gap closed 2. Which gap, John? We closed the major gap on ES, but there's several gaps. Oh, the secondary gap's probably what you're looking at on the SPY. Let me go to the daily. Hold on, we gotta go to the daily chart. Can't see the gaps like this. Too hard. You're talking about support. Yes, it is the gap close as well. Yeah. So they did close this gap, but I mentioned that it's a warning that they came into the 1 day max slowly. They stopped above it, bounced, and then they've already spiked through it a tiny bit. So if we go back to the 5-minute chart, I said that is not the likely destination if they do it slowly. And they didn't. They came halfway down, spiked it up, and now they've moved down. And while they got a little bit below it, I don't suspect today they'll get much below it. I would say this 670 area should hold it. But if they do start breaking below 670, that can be a lookout below moment. That can be a very nasty fall. Because what happens here is the market makers aren't prepared. They're going to, this is the final war. And if they break that, there's going to be, they'll come up with a level. They'll load up on a level that they're going to try to defend. You'll see this 1 day minimum move. That happens sometimes. Like I said, when you get a hurricane, the shoreline moves. So we'll see how aggressive the sellers are today. ADD is only negative 450. It's not really crushing to the downside. Normally you'd want to see like negative 1500 on these kind of days. So it tells you the Mag 7 is a big push here, which if you look at the Mag 7, they're all pretty, let's go back up to the Mag 7. If you look at the Mag 7, they're all pretty red, or they were. I assume they still are. Yes, SMH is down 2, Nvidia's down 2, Meta's down 2, Microsoft is almost down 2, Netflix is down a little, Amazon's down 2, Tesla's down 3, Apple's up 1. They're the only light in the darkness, and Google's down over half. So the Mag 7's really pushing here, and that's the scariness of a concentrated market is when the Mag 7 wants to do it, it doesn't matter what the rest of the market thinks. Stacy Racy says, don't forget to like the video. Heck yeah, Stacy, and share it, and comment, and subscribe if you're not part of the team. Band Honda JD says, trending down day, what are we thinking? I'm thinking they should hold this area, honestly. Like I said, if they don't, it can get nasty. I do suspect that any spike will try, obviously the floodgates can open, but anything down will try to close back up here. So be aware of that. The market makers do not let it close below these levels very often. They do. Obviously, it happens. The 1 day minimum on that Friday, like 2 or 3 Fridays ago, whatever it is now, it was here, and the market literally just went like this and never came back. And it was just nasty. So there are days that the hurricane wins, but for the most part, I suspect they will close above this level. So if you're short, obviously I think you should take some profit, see if you can get a hurricane, but this is where I would definitely want to be getting as much out and maybe have like an eighth of a position left or something. Any other questions? How did you select the strike for the spread swing, especially the lower one? You may answer here outside the room. The lower one meaning the call or the sell, the buy or the sell? A lot of RSI divergence on the 1 hour. I haven't looked at the 1 hour. Let's see. This is the SPY, so the ES might have different divergence. Oh, I don't have it on this chart. I got to go over here. There is, yeah. So they made the low here. They're about to make a lower low, and you can see that I don't use RSI, I use MACD, but you're going to get similar looks. You can see that they made the low here, right? And if you look at where that low is, they are negative 20, which is where you look for the market to bounce, by the way. If you're looking at the MACD on the hourly, positive 20 in that zone. It doesn't have to be exactly 20, between 20 and 30 or so. Sometimes they spike it up higher, but you should be looking for the market to flatten or turn around this zone, especially if you see it start to cross and turn down like it did. And you got a small turn down here. And then at negative 20, you should be looking for a bounce, and we got a bounce here. And then they came up, and they're making a lower low here, or pressing on the low. If they make a lower low here, it's going to be on positive divergence. So you're making a lower low, but you're not making a lower low on the MACD. So I see what you're pointing out there. The call. So that was one strike out of the money is why we chose that one. And then we chose 699 because it was just below that 700. And I think that they'll get to 7,000, which will kind of hit that zone. So I think that you can max it out. That's why we didn't go lower or higher on that. That zone seemed very likely should they explode higher. Starting to see a little bit of a bounce here off the 1 day min. Nothing to write home about yet. If you are a aggressive trader, I would not fault you. This would not be a bad trade if they give you a buy signal here. So if you get a buy signal off the 1 day min, that is a level that you would expect to hold more often than not, or even off this 670 level. Somewhere in this zone, if they bounce and give you a buy, that's an aggressive play for me because it's a downtrend, and if the dam breaks, you can get stuck. But more often than not, you would expect this area to hold. So it's not a, for me, terrible idea to take a long should you get one. Just be really cautious and try to hit lower. Don't be as greedy as you would normally. While they can certainly bounce this extremely strongly, you want to be taking profits, in these levels like the 8. If you can get profit at the 8, like a 20% gain. If not, you're going to want to look at like 673.57 to 674.26. So here's a quick price action lesson. When you see big trading bars like this, they are, let's look at volume. So where's our high volume bar? Our high volume bar is here. So this bar here is at the 8. That's going to create some resistance. And the top of this is also going to be resistance. So 674.12. This high volume bar here is having resistance. So you can see they've come back into this. So you have high volume. You see this high volume red spike down here on the low bar. You see the next one comes to the top of that, but because there's high volume selling on this bar, it's having trouble getting through. The next one comes to the top of that. It's having trouble getting through. So getting above that will start a mini squeeze up into this next high volume bar's low, which will be 672.64. That will be the next area of concentrated selling up to the top of that bar, which is going to be 674.10. And if they get above that, they're going to be right at VWAP and the 21, and getting above that should ignite a little bit of bullishness because the actual high here is on very low volume. They should be able to get through that with just a small kind of chop and go. Generally, the opening bar and the closing bar should be two of the higher bars of the day. So when you see selling bars that are bigger than the opening bar, that means volume is coming in decent for the day anyway. You'd have to compare it to other days' volume to see if it's big. Yeah, it's a little higher than yesterday's volumes, but you can see yesterday you had the opening bar, which was your highest bar of the day, until the closing bars, the last 3 bars of the day. And today your opening bar has already been eclipsed twice by sellers, which is why we're seeing the move down. So anytime you see bigger volume bars than the opening bar, those are key areas. Okay, so you are getting a buy here. Again, getting it back above 671.90 should give them a little bit of a squeeze into this zone here, 672.46 to 672.58. Get through that, and they can try to accelerate back up to the 21 in VWAP. But the top of this bar is going to be the key of 671.91 area. If they get through that, you should see a little bit of acceleration. Joseph says, so informative. Be sure to like the session. Thanks, Joseph. Welcome to the stream. George T. Dollar dumping. I smell reversal. Maybe. They like to trap you, and they've come down to key support. They've closed the gap. They've come back down to that low we talked about over here. I mean, they've basically made a double low, double bottom right here. So it would not shock me to see, and they're at the 1-day minimum. There's a lot of evidence that says bounce here, but until you actually see them start to squeeze out over this high volume candle, you could see chop. So just because they come into support doesn't mean they have to bounce. They can certainly do this. Even chop a little higher like this and then close down here and never get off this level, just kind of create a big bear flag. That can certainly happen. Or they can do this and stop you out. This is why I don't like to take these trades. To me, it didn't come in the right way. I don't fault you for taking this trade. It's not my personality to take this trade. A lot of people will tell you that's the only trade they'll take, is coming off of a support low into this kind of level. They'll want to take that trade. I don't fault them for that. That's their style. That's just different than mine. There's nothing wrong with that. Does dollar reversing support arise in the metals? People will tell you they have an inverse relationship. I take each chart on its own. There are one day doesn't really make a change, but I mean, if you want to believe in the inverse relationship, then yes. I personally think that gold has been ripping into the dollar for a while. The dollar ripped for a while and gold was ripping for a while. So not necessarily in my opinion. I don't think there's true cause and effect there. But but people will argue it does. All right, guys, I'm going to go ahead and wrap up at 8. That's 3 more minutes. I'll see how this bar closes and just kind of what's going on with the overall market, give a quick summary, and we'll wrap it up there. Hopefully you guys, we didn't get to trade, but hopefully you learned. So we traded once. It wasn't that good. Hopefully you guys learned something today and that helped you out or will help you out in trading. The reason I only have these 3 on my day trading chart, by the way, the 21, the VWAP, and the 8, is if price is above, bullish. If price is below, bearish. Everything else is kind of noise. You see that they will constantly, once they set a trend, they will constantly backtest, lower, backtest, lower, backtest, lower. So somebody asked earlier about buying on VWAP. Yeah, buying VWAP is, if you have a trend set, backtesting and then looking for the rejection is always a solid strategy if you're trying to play the trend. Now, if they had made this low and gotten back above the 21 and then backtested and done this, then you have what's called a failed breakdown, right? And then they're going to be heading back up here to the pre-market high at 679.56, and that is when you get excited about getting a buy signal right here, because that buy signal goes above, backtests, and now you're out the door. Lower low here, interesting. I might stay for one more bar. That's like the inverse of standing for one more beer, right? You stay for one more bar. After this beer, though, I'm going home. Probably. Just interested to see if they follow through here or give you the bounce. And this becomes the problem on trend days if you're trying to buy this level is you get a failed buy, and then if this buy fails, now you have 2 failed buys. And if you take a third buy, now you have 3 failed buys, and then maybe the 4th buy wins, but then you're shell shocked because you got drilled. So for me, that's why it's not conducive to my strategy. I'm looking for more probable winners. And when you're in a trend down day, the sellers are going to try to fight these lows, even though this is a area they expect to hold. That doesn't mean that the buyers can't fail getting off of here about 10 times and then do it. So I just hate trading against the trend. It's really hard. And I should say the full trend. So if we expand our day here, your trading box, if you will, is the pre-market high, for me anyway, to the pre-market low, and you need to make sure, for me, it's the true pre-market low. So there's blue after hours and yellow pre-market low. I really like the key levels indicator that I use that gives me all my key levels, but it only tracks the pre-market low from the yellow portion, even though the true pre-market low is actually down a little bit at it's only a couple pennies lower, but sometimes it's several dollars lower. So I like to know the real pre-market low. But that's your trading box. And then once they set a trend, you're outside of that trading box, which tells you they want to expand the range in that direction. And you don't want to trade against that. Now, trading against the range, that's exciting. That's where you want to be. So if they came up here and you got a sell signal right here, that's awesome. I will take that. Now, look, they're coming up. So we're trading against the quote unquote trend, but they haven't broken out and set a trend day. They've simply come to the top of the range, and you would expect that to fail. And if you get the right settings, we get a sell, and that's where you're looking for potentially the bottom of the range, or at least a small pullback before they go higher or something like that. So those are the types of things that you look for in trading. Once they get above the pre-market high or below the pre-market low, and then they set the trend parameters, you're just kind of trading against what the market wants to do, and that's really hard to do. No problem, Dan. Welcome to the show or the stream, whatever. You can call it a show. Remember, guys, if you want those Mentor Q levels, there is a link in the description that will take you over there and give you a discount on them. So keep that in mind. Yes, I do get a kickback if you use my link, but you get a discount as well, so everybody wins. And to you guys who aren't in the rooms, uh, I'm only one half of the equation. PT, he is um, he is a crusher. He is such a good trader, and he does things differently. He is more in the futures realm. He runs a lot of advanced trades that are moneymaker type trades, meaning they're meant to generate cash, not necessarily meant to follow a trend. He's a very skilled trader, and the people in his room love him and do really great in there as well. So keep that in mind. You're only, there's two halves of the equation in the rooms that can help you out. All right, so it looks like the bulls are going to try to give us a bull bar here. Okay, volume on that low, not great. Doesn't certainly doesn't sell me as the low that they're trying to make and reverse off of, but they don't have to have incredible volume on a mid-level low like that. You just like to see it for confirmation, but we'll see if the bulls can bounce a little bit, maybe back up into this 675 area. This yesterday's low, back test that, give them some room to come back down into the one-day min if they want to do that, or potentially even squeeze out of here. But they still got to get over this high volume high. So high volume high. That's what the pot smokers say, I think. I sound like a guy from the 80s. You pot smokers. This high here, high volume, that tells you a lot of sellers are sitting down here for some reason. I don't know why. This is a terrible place to enter the market to the short side. But they are here, and that's the level to get over. And when they do, you should see a little bit of acceleration. You also have the 8 coming into that now, which is your momentum line. So there they go. Try to break it. Let's see if we get a little. We'll do one more bar. After this one, though, I'm going home. JG and PT 2028. Oh, I can't fix this circus. There's nothing to fix this. I have no idea how to make people more sane. So now that's 1, 2, 3, 4 rejections off of that level. So it's a quick way to kind of understand where your key is, right? You want a good entry. So obviously this buy gives you a better entry. But if you're wanting to play a little safer practice, you can wait till they break this level and then take a buy up here, because you're very likely to come up at least to the 21 in the top of this bar, which is also a decent volume high at 673.55. So it gives you a little bit more of safety that they got through this area and will likely squeeze. because they're rejecting this area pretty hard right now. And pretty hard's relative. They're not allowing a simple 5-minute bar to even get above it, and that's an indication that the Bears are still trying to control, and you're going to get rejected enough to. And this is again what I talked about. So this buy failed most likely. This buy probably failed, and I just don't want to get trapped in that circular buy cycle that we're hoping that they break out when they may never break out. We're just burning up money. So I'd rather just sit it out, not burn up any money, and wait for better setups. There's better setups in my opinion. JG, who are you rooting for in the World Series? Honestly, no one, because I wanted Seattle because I just Cal Riley. I mean, he just looks like Shane Gillis out there hitting home runs, and then they call him the Big Dumper, and it's just hilarious to me. And the dude hit one of the most clutch home runs in the history of baseball for the Seattle Mariners, anyway, in Game 6 of that series, or Game 5 of that series that they had to win. And I was just kind of rooting for them. My wife's from Seattle, so my father-in-law and stuff, so they're all rooting for the Mariners. I wouldn't typically, but Cal Raleigh, I just like that guy. He's funny. That the idea that that this guy who looks like he should be in a bowling league didn't give up a passed ball all year and hit 60 plus home runs and threw out like 30% of his runners or something. Like, I just don't get it. It's awesome. It's like having old Babe Ruth out there. I just wish he'd come up and drink a beer before he swung the bat. Yeah, it was a great series. The Blue Jays, man, they are hard to get out. I never seen a team that hit the ball so good that 1 through 9. You know, I've seen a lot of teams that have good 1 through 6 hitters, 1 through 7 hitters, but even their 8, 9. I've never been a huge baseball guy, but my dad liked it, and I've watched a lot of videos of like the Big Red Machine because I grew up in Kentucky, and that team had hitters 1 through 9 or 1 through 8. I guess you didn't have pitchers. You know, pitchers weren't hitters, but that were pretty good. When Johnny Bench was your catcher, you know, he's kind of like a Cal Raleigh type, and you know, just everybody on that team was almost a Hall of Famer. So the Jays were hard to get out. That was a good hitting team. All right, so no squeeze there. They rejected, and now they're trying to follow through. I think you're going to get a lot of chop around here. You may eventually get a buy that works out, but again, you're chasing, in my opinion. And at this point, you're burning up money. So it's okay to miss a move. If they do buy and run out of here and run back up to 677 or something and have an incredible bounce, that's okay. There'll be another one, you know, that you get right and you get at a better place and you get as a easier, more direct entry than this. When you have a trend day down, it's harder to get those bounces off of these support levels because the Bears are trying to win. And even if they can't here because it is the 1 day minimum, you are seeing the battle happen. I told you that this was like a fortress with a moat and guys on horseback with swords and arrow guys at the top of the castle and all that stuff. That the market makers are going to defend this like crazy, and they are. You can see, you know, they've been down here 1, 2, 3, 4, 5, 6, 35 minutes battling this out. And ultimately, I do think the Bulls will, quote unquote, win, meaning they won't go lower or too much lower, maybe that. But you're kind of guessing at when that's going to happen. All right, guys, I'm going to go ahead and shut it down. Hopefully, you guys learned something today since we didn't get to trade too much. And we'll do it again next week. Back on Wednesday again next week. Sorry for the miss yesterday. The bank said, we got Wednesday at 9 open. And I said, of course you do. course, that's the time you have open. So, anyway, I had to go down there and I wasn't able to live stream, but next week it'll be back on Wednesday again, and we'll go from there. So, have a good night, everybody, and thanks for joining, and we'll do it again next week.